Welcome to Trading Corner. We're just going to debrief on the market for the last week, see where things stand and where we go from here. So, margins. I mean, look at this chart.
Just flying.
That is unbelievable. This is from May we've got, but we're at yearly highs, right?
We are.
Incredible.
Yeah, it's been the single most performant trade of the year. And gas oil obviously driving an enormous amount of that.
Yeah. So this week it's been mainly gas oil, right?
Correct. Actually, you've seen some of the other products correct slightly lower. Gas oil and gasoline have been the standout performers, I would say.
Why do you think? What do you think is going on there?
Again, I mean, we're seasonally coming into the most strong season of gas oil, right? So gasoline is a separate story, but gas oil for sure. There's an enormous amount of positioning in gas oil as well. You've got
to the long side.
To the long side, which is creating an enormous amount of noise in gas oil. I mean, interestingly, the back has been relatively more stable and performing. The front is where the noise is, as is always. But I think we could see more noise. I assume there have been some stop outs on the short side with this gas oil move last week, but you don't know.
Yeah, also just looking at the charts, I mean, the behavior, it definitely looks like there's a lot of buying in the morning. Typically into the evening, we tend to trend down a little bit, but then it catches a bit right, like the next morning,
exactly.
And just totally reverts the sell-off that you get. So we're slowly trending up, but it definitely looks Asian-led.
And actually, Asia has got a lot of strength and is showing a lot of strength on the gas side as well.
Which is unusual for this time of year, right? As in, usually India should be exporting gas oil, and it doesn't look like they're doing that.
I think it's probably due to the crude slates that are coming in, or the uncertainty around what crude is being bought. It's just my theory, to be honest, but. We're also, there's cold weather starting to come in. We've got a bit of a cold snap in the U.S. Still not that cold in Europe, but I think in about a month or so we'll be able to tell. And
it does
it's
feel
going
like
to draw.
It feels like we're having our winters later and later.
Correct.
So the classic. I think maybe 2-3 years ago we had a big Texas freeze in January.
Yes.
So it might look like actually a lot more of the cold weather will hit in the new year rather than. We're in mid-November and it's 15 degrees. It's crazy. It's crazy. So that might be why. But to be honest, like if you look at the whole complex, so margins and also what crude's doing, it just looks like refineries are not running anything.
We don't have enough capacity in the world.
Yeah.
That's the only explanation.
So obviously we had the Lukoil stuff. Some of their refineries got hit by some of the Ukraine missiles. Not that much though.
Yeah,
the only other refinery we're talking about is Dangote. So
correct, and actually, we haven't really seen refiners come fully back out of turnarounds.
No,
I suppose so. That is possibly one reason. And again, I think 2 weeks ago we talked about products trading independently as products, and it's not that everything in the margin is rallying, right? A lot of this is primarily due to gas oil. There's a decent amount of gasoline strength also, but fuel has corrected down. Fuel sold off a substantial amount in the prompt cracks. Naphtha's kind of just hanging around as well. It's not was up a little bit last week. It's a little bit further down now, but nothing to write home about really, because I think the light end of the margin is really what is people are looking at.
Yeah, really performing. Yeah. It's so true. But then the report, so just back to the slates quickly, the reports that we're seeing on production, so like, global production, let's look at the US, typically a lighter slate, should be more naphthenic, potentially gas oil and distillate producing. There's a lot of production coming out of the US at the minute. I mean, I think I read that Chevron are at max production. So there's a lot of light sweet around, and the stuff that's not getting bought, potentially Russian, OPEC holding back, that's the fuel dominating crude barrels. So it's quite interesting to see that.
You would think the opposite, right?
Yeah, exactly. Just for the the waste barrels, the one non-middle distillates. It's quite interesting that it's happening that way round.
Yeah, and but It is interesting, and I would agree with you. You'd normally think that actually, as we discussed actually last week, we think the light heavy margin might compress a little bit, but that's the exact opposite is happening.
Very interesting.
I think on the light side, or the lighter side, I should say, naphtha is largely being driven by gasoline at the moment. The gasoline strength is the feature.
Into the blending pool.
Yes. Yeah. Yes. I mean, there is proper gas snap hedging, that's been active over the last few days, especially on this gasoline strength. And then it feels like the ARB is actually open. So with the amount of strength that we're seeing in European gasoline, I feel that there's probably going to be some fixtures going
from the US?
To the US.
Oh, to the US.
Yeah, to the US.
Oh, I see. So it's a US product strength that's pulling everything up?
It was the US product strength that was pulling everything up. Now I feel like it's Europe that's keeping everything up on the gasoline side.
So I guess until we start, getting these run rates back to 100, we should expect this kind of spot buying. So it's predominantly in the front, right? So we should expect that to remain. To be honest, seasonally, the refiners should be back. I think it's imminent they will be back.
I imagine so,
They should be buying, over the last week or so for kind of mid-Nov, deck for short. Given these margins, they have to run 100%. I mean, it's a bit silly not to.
Correct.
So
is it a demand side story then?
Well, it seems like it. I mean, I think this whole year has been very whipsawy. I think, the positioning has just been crushed. I think there's not a whole lot of confidence on the curve, and so people are just a bit jittery, it seems like.
It's really interesting that you said that, just because we are coming into the new year, right? There's a lot of firms that are going to be wrapping up the end of the year.
Yeah.
And I think it's not something to ignore, because in addition to wrapping up the end of the year, there's a lot of companies, traders, that P&Ls start flat in the new year. And there's probably a lot of planning going on for what risk is going to be put on in the market.
What Q1 will look like. Exactly.
Correct. And I think it's worth talking about that.
Yeah, no, it's true. I think, all year the market's been looking for a different rhetoric for next year.
Yeah.
And the closer it gets, you need to start then looking to position, etc.
Yeah.
A lot of refiners as well, they might be clearing out their crude stocks. So it might be why we're seeing a lack of buying in crude specifically. But it does seem like it's Dubai-led, to be honest. So all year, Dubai has held up the whole crude market.
Yep.
Really exceptionally, to be honest. And it's just totally flatlined the last week or so. We had fairly good expectations for pricing. I think the first day of pricing was around 130 on the spread. We're currently pricing 50 cents. So really, there's been a lot of subdued activity, like not aggressive,
not
that much.
Spectacular, yeah.
No, it's really quite underwhelming, to be honest. And seeing as Dubai has been the one that's led the crude market, everything else is also quite soft. So just looking at dated quickly, I mean, we had this, bull play for October and November. Trade House took predominantly all of the cargoes for those 2 months loading. Now I think what's happened is most of those barrels have probably cleared. There are probably still a few around, and so we've got this front overhang. But despite the margins, the market is not confident enough. Given that strong rally, you need to let the market reset at some point. To be honest, I thought we had it before the sanctions. We hit quite low on all the spreads. The diff came down, and then that short. The short covering came back in, but I don't think that's how the market wanted to have that short covering rally.
Okay.
So now it's happened. You've just stopped people out on both sides. And
we're in no man's land a bit.
We're in no man's land, so it's just super sensitive to flow. If one person comes in doing something, you can just see the market gravitate whichever way that's going.
Yeah.
It's just showing a lack of liquidity and positioning.
It does feel very liquid. It feels extremely. We discussed this last week. The market is going to be flow driven for the rest of the year.
Definitely, but right now, I feel in crude at the least, there is a lack of flow until these refiners come back and they start purchasing. But again, it could be a contagion. As soon as one buys, the next, we'll have
A little bit of herd effect.
So I think it'll be very momentum based, which could be good for the market, to be honest.
Yeah, probably, and I think you'll see the same thing on products, and I think it's going to be thin for the next probably all the way to the end of December, I would say.
And we have Thanksgiving before that as well.
You've got Thanksgiving, and then you've got Christmas coming up. A lot of people on holiday, a lot of people unwinding books. But importantly also, there's probably going to be a lot of positioning of the market for the new year, pre-positioning of risk and risk for the new year. And I think if you look at it psychologically, it's probably going to continue driving products up.
Yeah, it looks like it.
Yeah, and so the question really is the margin hedging sufficient to just take out? Is the product buying going to be sufficient to take out the margin hedging? And I would suspect so.
Yeah, well, that's the other thing. I think one of our fuel guys was saying last week we saw a reversal of the margin hedging from spec buyers, I assume, like funds, etc., people that don't need to actually hedge the margin. So those that were trying to catch the highs. But you go from, I mean, just quickly here, they were probably hedging around $8-9. We're now at 11.5. Hit 12 on Friday. A refiner's going to be running at 100% at 8, still 100% at 11.5. So it's kind of immaterial.
Because this is obviously deck margins, right?
This is currently it's rolling month 1, so it's
so prompt margins.
Exactly.
Right? I'd be curious to see what Q1 margins look like because if we're talking about momentum and we're talking about risk coming into the new year and what's worked this year, which has been product length, crack roll length, and those have been themes that have been working consistently over the past year. I think you'll find that there might be a lot of trade that comes in to buy, or traders rather, that come in to just reload on products, looking at a potential margin roll up.
Yeah, to be honest, we have had that. I mean, I remember looking at it last month, and the margins were around $9-10, I think. We rolled on the month, and I think we rolled to 8.
Dropped a little bit, and
then they boom, all the way back up, and through the highs.
Correct.
So yeah, totally right. We could definitely see that. But yeah, very interesting dynamic, I think.
Yeah.
It's I just don't think we can take this gas oil as like it's here to stay. It feels like it's here to stay.
The gas oil strength.
Yeah, I don't think that's.
I don't think that's going anywhere.
Yeah, I don't think.
I think
it's
in fact, I think it's not. I think you're probably going to continue to see strength all the way through to next year.
Yeah.
Which is going to keep the margin high. So what corrects on the back of it, right? Maybe naphtha a little bit, maybe fuel a little bit. But the reality is that there's any demand will probably take a lot of that out, and I think it's the prompt margins are a bit scary when they're this high to be just constantly long. But I mean, I like margins further back.
Yeah.
I think it gives.
For their roll up.
Not just for their roll up, just looking at the price of product spreads further back and the price of and crude further back. I think I'm still convinced that we have to move up on crude.
Yeah.
And if anything is going to come in the balancing factor for margins, I think it should be crude strength.
I agree. I totally agree. It's just a matter of when. It's very much a timing game at the minute. So that's kind of the price action we've seen. Just quickly geopolitically, it's hard not to really talk about it, but we're still waiting for this deadline, November 21st, to come in for the Russian oil sanctions. Maybe that's what's put the market in limbo a little bit. But since over the weekend we had, China, US drop their sanctions on the ports, which it should help TI, I think. So I still like the TI Brent trade. I think that's I think that will perform, just despite, if the sanctions do go ahead, US will be bought. If the ports, and US-China tensions totally relax, US will also be bought into China, into the east. So I do think US is the barrel that you want to be buying. Currently, it's also landing very cheaply in the North Sea. So when refiners do come out and buy, it's likely that that's the barrel that they will want to purchase.
That's going to be the marginal barrel that's going to define it.
Exactly. So freight's still a little bit toppy, but it does feel as time goes, the geopolitical premium is narrowing. So I do think that the freight will also start to come off a little bit.
Yeah, and I think tariffs are a really important factor in freight. To be honest, I know that's not just the only factor, but I think we've had a lot of tariff-related headlines this year.
Yeah.
There's still a lot of uncertainty around some countries, but over the past week or so, especially with Trump's trip to Asia, there have been more and more trade deals being struck, and it does feel like things are normalizing to this tariff world. And I say that with a bit of caution because obviously we're, speculating Trump's policy on tariffs is a little bit difficult.
It does feel though the last week or so he has softened his stance quite a lot. I mean, I think I can't remember what country exactly, was it Hungary, where he's just said, don't worry about the sanctions. You can purchase Russian oil. It's all good.
Yeah.
So it does look like his stance is starting to soften. So I do totally agree with you there. But then we still have potential upside or downside risk as soon as he comes out.
Yeah.
So it's just a bit of a.
It's like I think, and the market's trading that way, both crude and products. I mean, a lot of people are just a bit. I'm going to stay out.
Exactly.
And wait for some high conviction moves.
Yeah.
Or I think traders can be inventorying risk further back in the curve where it's a little less volatile and maybe more high conviction. And that's my approach at the moment. I still like those back end margins.
Yeah.
Not all products, some.
Yeah.
I'm not going to go short gas oil, but even gasoline, I think it's. We're in winter gasoline here.
Yeah.
I know. I understand.
Where's the crack?
It's 15.30 in deck or something like that, and
Wow.
it's and that's, I understand that we have a tight complex in gasoline. There's some tightness in Asia. We're pricing strong in November, but driving demand, any general end user gasoline demand is going to dip off as we get colder and colder across the globe, so across the West, I should say. And I'm not really convinced on the gasoline strength, and I think that could be a part of the margin that does correct.
Yeah. Well, let's see.
But like I said, it could be insignificant.
It could.
Because 11, 10, 9,
No, exactly. Yeah.
All profitable. Right.
Okay, cool. So just talking about high conviction. What's your trade into the next week then?
I'm actually gonna say short gas snaps. I like to be short some gas snaps probably in the summer, Q1 of this summer, and then still long back end margins.
Okay, perfect. And for me, I still like the TI Brent boxes, so that's definitely being kept on for 2 weeks ago. Last week was long NovDeg. That has not performed. I still do like it though. I think the risk reward is to the upside. It looks to me as though it's been oversold. If any kind of marginal refiner buying comes in, that is the contract that's going to move. Also, DEC Jan, we've got really strong margins. There's no reason that DEC should be underperforming given where the products are, potential run rates that we're going to get into December. But obviously, you need to be cautious around Christmas week, etc. So it probably looks like long DEC structure is probably the crude trade for now.
Sounds good.
Cool.
In agreement.
We'll see where we are next week. Thank you.
Thank you.